Hi, everyone. Today, I want to talk about stocks I'm trading. Every Wednesday, I talk about some news and charts around the stocks that I'm trading. And first up for today is Peloton. Peloton is currently surging on the announcement of a new, higher quality bike, as well as a lower priced treadmill. Next up for this episode, Yeti earnings continue to grow, and it seems like the Rona has no effect on them. And lastly, for this episode, let's talk about Ford earnings as well as some of their fundamentals. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like owning the Audi RS7 Fastback ABT, or if you want to be part of a well-educated financial community, definitely like and subscribe. It has 666 horsepower, and only 125 of these will be made. It's expected to cost $200,000. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. Looking at the price action for Peloton, it's been on quite the tear since the lows of March, starting below $29 a share, and it's currently trading right at $88 per share. You can see it's been bouncing off this trend line pretty steadily, and it's broken out to the upside currently. And I think this is because they're coming up to their earnings report. Looking at the volatility, it did spike up pretty heavily, but it's currently on its way down. Moving on to the article, Peloton announces that they will launch a more expensive bike and a cheaper treadmill. They say the fact that Peloton announced a slew of new equipment caused the stock to surge 9%. The new Bike Plus will cost $2,500, and the new tread will also retail for the same price. They expect these products to be available in early 2021, and the original Peloton will drop down to $1,900, down from the original $2,250. The current treadmill retails for $4,300, so the cheaper tread at $2,500 is quite a step down. The CEO, John Foley, mentioned that they feel like they are just getting started. Peloton sales have surged 66% since the end of March to over $500 million. They announced that they have a subscriber base of 886,000 people, up almost 100% year over year. The new Bike Plus will have a larger rotating screen, and it will also have a 4-speaker surround sound system and touch-free resistance adjustment. And as I mentioned before, the company's shares are up over 180% in 2020. Analysts say they expect demand for Peloton's and competitors' products to remain strong going into the future, due to the fact that customers remain at home and they are currently building more home workout habits. They say the whole fitness industry is going through structural changes and that they expect a high adoption of digital fitness, which can be done at home. Full disclosure, I am currently short the $78 puts, which expire on September 11th. I expect that Peloton will hold this price action through the earnings report and that we may see some kind of correction in the short term afterwards. Of course, this depends on the earnings report, so we'll have to wait and see. Taking a look at some Yeti price action, you can see from the lows in March, it was around $15 or $16 a share, and it's currently trading at $49 per share. So it's had quite the run, and it's stayed in this channel for a while, but it looks like it's starting to flatten out and potentially consolidate. Looking at the IV rank, it is lower than average. Going back to June alone, it's around half the volatility, so if you're looking to sell options, it's not a great choice right now. But following consolidation, it may have some upside potential. Moving on to the article for Yeti, they say that earnings continue to trend upwards despite the Rona. Revenue was up 7% over second quarter of 2019, which is especially noteworthy since it was down 20% in April. The lion's share of Yeti revenue tends to come through wholesale channels. However, direct-to-consumer sales is really what's driving the business right now. Direct-to-consumer has soared 61% to $133 million. During their earnings call, they explained this by saying that their wholesale business goes to retail locations, but since a lot of those businesses have been closed, they're not ordering quite as much from Yeti, and the lockdowns are causing individuals to go to Yeti's site directly, which is driving up their direct-to-consumer sales. Direct-to-consumer, as you would imagine, does have higher margins versus their wholesale business, and this drove up their profitability by 51% year over year, with a net income of $33.5 million. Direct sales also generates more brand loyalty, which could speak to future potential for the brand. They mention the fact that Yeti is still a very young company in the early stages of developing its brand, and most of its business is currently focused in the Southeast. However, they are expanding to the rest of North America as well as internationally. They say the new generation of consumers, which is pretty millennial heavy, is focused on lifestyle as well as direct e-commerce, which is yet another reason that direct sales has improved for Yeti. Of course, the Rona has affected consumer discretionary spending. However, that hasn't impacted Yeti as much as other brands. Their strategy relies heavily on influencer culture as well as brand ambassadors through social media and frequent posting. To me, this makes sense and tells me that they have a well-developed advertising plan, which really speaks to the new way that effective advertising should be done. Currently, Yeti is up over 1% today, and looking at my positions in Yeti, you can see I have 4 contracts which are currently returning a profit. I am short the $48 puts with an expiration of 9 October, and I'm also short the 18 September calls, which I will potentially look to close later in the week. Finally, for this episode, looking at the Ford price action, it's been slowly uptrending since April, and we just broke above $7, and hopefully we can maintain that price action going forward. It's been dancing around that price for a couple of months now, and if we can get above that $7 level, I think there's potential we could get back closer to recent highs. If we zoom out and look long term at Ford stock, it was much closer to $10 a share in December, but of course the Rona affected everything, and it's been very slowly recovering. If you're going to sell options, be aware that the volatility is very low, currently sitting around 18, which is less than half of where it was just a few months ago. Moving on to the last article of the day, is Ford stock a buy now after its earnings report? And let's take a look at some of their fundamentals. They say Ford is investing heavily in autonomous vehicles as well as electric cars in order to keep up with its competitors, but does that make it a buy? They unveiled the Mustang Mach-E in November, which they said is a pivot towards the digital future. They also unveiled a redesign for the Ford F-150, as well as resurrected the Ford Bronco. They also launched a partnership with Volkswagen, Rivian, and Mahindra to strengthen its global presence. Ford managed to beat Q2 earnings, only losing 35 cents per share, with a revenue of $16.6 billion. They were expected to lose $1.27 per share, with the revenue just under $15 billion. The CEO mentioned that they were very proud of Ford and their team and how they delivered a very strong Q2 versus expectations. The CFO mentioned that they might lose $5 billion in the quarter, but they managed to only lose $2 billion. Most of this was due to the fact that Ford was able to open some of its production facilities ahead of schedule, and it also got a boost from the announcement of new vehicles in the lineup. I think this is mostly due to the fact that the Ford Bronco is an iconic line, and there's a lot of excitement talking about the Ford Bronco. Of course, the stock did fall for a reason, and they do have fairly significant headwinds in terms of debt, and the current outgoing CEO was trying to conduct an $11 billion restructuring plan, which ran into several roadblocks. The major roadblock was a botched redesign of the Ford Explorer, which really put a dent in their revenues. During his tenure, Ford stock fell over 40%, which obviously is not good. They continue to talk about the relaunch of the Ford Bronco, which, as I said before, has a lot of people really excited about the brand. Looking at my position in Ford stock, I'm currently short these $7 puts, which expire on October 16th. So to summarize, I'm pretty bullish on Peloton due to their expected strong earnings as well as their new line of equipment. Currently, I am neutral on Yeti. I think they have a strong future, but in terms of price action, I think they're going to consolidate for around the next month. And finally, looking at Ford stock, I'm pretty bullish on Ford. I think they've been beaten down more aggressively than they need to, and the rate that they continue to innovate and develop new products that are exciting has me excited for the future of the brand. Let me know down in the comment section what you think of each of these stocks. Am I right? Am I wrong? Is there something that I missed? Definitely like and subscribe if you got any value out of this video. Of course, this is not financial advice. This is all for entertainment purposes. And with that, let's get to the jelly. Today's jelly is an insane badminton rally from 2016. So here's what that looks like.
fooled himself. Oh, unbelievable. This is extraordinary. What a rally. Oh! Oh my goodness! That surely has to be the play of the day.
As you could see, they made badminton basically as exciting as that could be. Comment down below what you thought of this video. If you want to watch the full video, it is linked in the description. Definitely like and subscribe before you go, and have a great day.